Good evening, everyone. Welcome to Hit the Bid here on August 2nd. This is Ty Robbie here with your Week 31 Market Watch. Today we're going to run through our charts and see what happened in these markets over the last week and see what we need to be ready for as we head into Week 31. So let's jump right in and get started. First up, we got our October live cattle on the board. We did see some mixed action here across this cattle market last week. This October live contract opening up with a gap lower on Monday, briefly poking down into some new yearly lows, printing at 216.95. However, that was all the downside we got last week before this market saw a nice little relief rally into Friday's session. This market bouncing off that 217 low, rallying right back up into the high 220s before running into some resistance here inside these major averages. This market has been beat down over the last 6 or 7 weeks here, as we did see a nice little sell-off from about 242 all the way back to 217. Seeing that this market was pretty oversold, overextended to the downside here. This relief rally was well overdue. So we did see this market see a nice little push back up here against 228.5 as the high last week before Friday's session seeing some resistance. Early rally sold off here late into the close, finishing last week at 227. We do have a nice high volume node here showing that this market's looking pretty heavy right around Friday's range. At the moment, we should see this downtrend resume. We expect to see these sellers get active here again in the high 220s, low 230s throughout the next couple days. This thing could continue to balance out here and trade in some tight daily ranges over the next couple days as they try and gather up some more sellers here before taking a swing lower. But be cautious here. Any sort of offers down below 227 and Friday's low should get that next leg lower rolling and kick off this next leg of this downtrend. See if this market can come back down here and attack that 217 level once again. This has been a pretty crucial spot here. Good support here off that relief rally, so we'll have to wait and see what kind of response we get if we do revisit this level. A higher low here would indicate the bulls are going to try and turn this thing back around, or a nice early breakout back above 230. We need to see a nice strong convincing close back above 230 in our major averages here before we can start thinking about any sort of sustained upside. But in the meantime, continue to be defensive here. We need to see those bulls prove their point and get this market back moving to the upside into the 230s before we can get comfortable on the long side. In the meantime, we expect to see this resistance hold and these sellers get active again here in the week ahead and try and take this cattle market lower once again. Look for this market to try and balance out here and run into some more resistance in these averages. Offers below 227 should get the ball rolling lower, and be cautious here until we can get a close back above 230, and that should open the door to some upside. But in the meantime, the sellers are still in control, and we should see this downtrend keep pushing these live cattle prices lower. Next up, September feeders on the board. This market was a little more choppy last week compared to the straight relief rally we got in that live cattle market. This market still continuing to hold on to these range lows even after Monday's big breakdown here, seeing a nice push down there below 333, which is a pretty key level, but throughout the remainder of the week we did see this thing fight back up into the 340s. Not reclaiming that 345.5 level though. That looks pretty important at the moment. These range lows are holding right now as it stands, but things are getting heavy here, and we continue to see some heavy selling pressure up here, and so not a good look here at the moment. As long as these bulls can continue to defend this 335 to 340 area, they have a chance to keep this thing range bound, but that live cattle market looks pretty heavy, and these feeder prices look like they're trying to slip here as well. This market did see a little bit of pushback here on Friday as well off that 20-day moving average. We didn't get quite that volume like we saw in that October live contract, but still seeing some weakness late last week, setting the bulls up for, setting the bears up for another leg lower here in the week ahead. Look for any sort of offers below Friday's low at 342.10 to try and take this market back down here to the mid to low 330s. We'll have to wait and see what kind of response we get down here, as each time we have got a nice little bounce, but right now this feeder market's looking pretty heavy, and if we continue to see some more selling pressure here below Friday's low, we could take another run down here and potentially break this range low and get both this feeder market moving lower along with that live cattle market. At the moment, I encourage everyone to remain cautious, remain defensive here while this market tries to find its footing. We need to see a nice strong convincing close back above 345 before we can really start thinking about any upside. Even so, this market has just been pretty sticky and range bound throughout the entire year so far, and so it's not really the best environment at the moment. Still, we need to see a lot better structure and more participation across both of these markets before we can get comfortable with some sustained or meaningful upside. In the meantime, though, we expect to see this market be a hard penny environment. Look for those sellers to continue to keep the pressure on here and try and take another swing lower. Keep an eye on that 330 or that 230 level for this October live contract, and 345.5, which was last week's high here for this September feeder contract. Those are going to be some important levels to the upside. If we do get this market to break out above them, we could see those bulls try and take another run. But at the moment, just be cautious here going into Monday's session, as we could see the sellers try and take another leg lower. Next up, December corn futures on the board. This market continues to see some big swings both directions. As I've stated, it has been one of the most directionless markets in the whole market all year long. We continue to see this thing bounce back and forth between about $5 and $4.50. Really not seeing a whole lot of good structure here. This thing just has been choppy. Not a whole lot else to be said. We're just going to set this thing down here at $4.50 and $4.92 roughly. The last couple of weeks high up here at $4.92, and this recent breakout back above $4.50 has kept this market supported. So in the meantime, we expect to see these wide daily ranges and some more choppy action here across this corn market. Don't have a whole lot of directional advice at the moment. Just going to expect to see this thing continue to chop up in some wide ranges, and not really a good trending environment. Look for this choppy action to remain here across this corn market. Next up, crude prices seeing some back and forth action last week. Prices opening up with a gap lower last Sunday, flushing all the way back down into the 70s before snapping back up to 87 on Friday. This thing seeing good pushback off of those lows last week, setting those bulls up for a nice breakout potential here above 87. But so far here tonight in this August 2nd Sunday night open, we did see this big gap lower all the way back down to $80, which is our bear pivot for the week. If we see this market open up and those sellers get active again below $80, look for this thing to start bleeding back out down here below 70. We continue to see this thing be pretty indecisive, pretty choppy at the moment. Last week's late rally was setting those bulls up nicely, but this big breakdown we saw here, already down 5% here in the Sunday night off that gap down, has those bulls rocked back on their heels here. We'll have to wait and see if they can defend last week's lows, but at the moment this thing's looking heavy as well. We should see these crude prices continue to bleed out. At the moment, this market still remains pretty reactive to the news, so keep an eye on any sort of developments going on overseas. This thing could be pretty responsive to that, so we're going to continue to see some decent volatility. But if this thing continues to bleed back down here below $80 in last week's low, we should see this thing kind of fizzle out back into the $70, and that situation over in Iran start to cool off once again. Next up, equity markets did see some back and forth action here as well. Lots of volatility across all of our markets last week. The S&P seeing an early breakdown below that 50, looking like this thing was going to get nasty, but then we were kind of saved late last week, as we did have some mixed reviews on some of those earnings on these mega cap names, but enough buying pressure late last week. Amazon up 15%. Did see lots of, we got some support in Nvidia as well. Apple was broke down off of those earnings, but still was one of the better, was one of the big leaders going into last week. So this thing is still pretty well in pretty good position here, even off of that big earnings breakdown. Microsoft also seeing a nice breakout back into uptrend territory. Amazon back up. Google closing above its 50-day average. A lot of these other guys. Tesla still not looking good. Facebook not looking good. But other than that, we do have some pretty mixed action. But we did see some bullish action last week on some of these earnings responses. So enough to get a nice little bounce late last week in these indexes. Seeing this market rally back up here, and so far in the evening session, this S&P futures also getting a gap open above our bull pivot at 75.41 already for the week. If we can see this thing hold and see a nice 1% up day on some increasing volume tomorrow or better, should set us up for a nice little follow-through day and get this uptrend back on track. But at the moment, just continue to be defensive. We want to see how this market starts off, but if we do get that follow-through day, would be a good time to start putting that money back to work after this recent downside. The NASDAQ is still the weakest of the bunch here, trading below its major averages, but seeing a nice bounce late last week as well. We need to see this market get back above those major averages before we can really get comfortable. The Dow continues to lead here, being above the 20 and the 50 here at the moment, seeing good support late last week during off of that 50-day. Still seeing some pretty mixed action here across the board, but At the moment, we are seeing some good responses to some of those earnings late last week, and as long as this market can hold some of that upside we saw late last week, we do have some potential for a follow-through day and getting this uptrend back on track. We just need to see these indexes kind of clean themselves up. We still have some sloppy charts here across the board, the Nasdaq especially late last week getting that nice bounce off of this low down here around 27,250, but this market did just retest that 50% retracement of this recent rally we had up to this all-time high. So not a bad spot for those bulls to get involved here, and we should see this thing try and battle back in the week ahead. If we do get any sort of nasty breakdowns back below our averages, that throws it all out the window, and I encourage everyone to be defensive in case of that. But at the moment, the bulls are setting up here, looking like they're going to try and take a nice little rally attempt this week. We'll continue to monitor the situation during closing comments throughout the rest of the week, and as we can start looking for opportunities to be putting that money back to work. In the meantime, be cautious here. Be defensive while we wait for this market to confirm that guess. But at the moment, this market looking like it should be setting up for a decent rally attempt. Let's continue to monitor the situation and see what this week has in store. Thank you, everyone, for tuning in. We'll catch you guys tomorrow night.